Kevin. So where are you?
Well, I'll talk my book. I mean, I invest basically half in the S&P 500 and then half in my discipline. And because I don't make I make money when the market goes down. I try never to lose a lot of money. Beating the S&P is very, very difficult year in and year out. So I buy the S&P for next to nothing, and then I do my crazy things like invest in silver and uranium and copper,
And so on that one
it works
half,
out.
if you call that one half your discretionary side, because even though the S&P is discretionary, we'll just call your active side that half. What's your largest position? Is it
Leverage
10%?
right
Is it
now
30%?
is XES, which is the oil and equipment services ETF, more on the smaller side. Schlumberger's in there, but it isn't that big. But I bought it way before the war started. I started it when it broke out, when the market sniffed out that oil was finally going to do something out of the 60s, and this worked out. So that's my biggest position right now.
But I mean,
XES.
what I mean is percentage wise, out of your active, is it 10% of your portfolio? Is it
I
20%?
I buy 10% of positions. I have the 10 best ETFs out of the 5,500, and I use forced displacement.
Got it.
So now it's
All
12,
right.
13, 14, something like that. I didn't look today, but
All right. All right. Well, that was an easy way to ease in there. I think if we asked every one of the partners here at Wall Street Beats, we'd have a slightly different position. That's what kind of
absolutely.
investing is so individualized.
That makes us
So,
great.
so Ben, what do you have for today? What do you want to talk about? The end of the war, the middle of the war, the beginning of the real war? What did you
No,
want
I'm just kind of amused that we're like back at the all-time highs, basically. I think that what's interesting today is Bitcoin's kind of breaking the downtrend.
Yep.
If you wanted to say, oh, risk on, right? Like the S&P, I mean, we're back almost at 7,000. Well, you might as well buy some Bitcoin. So that's 75 and change. It's kind of breaking the downtrend. Like if you didn't catch this 600 points 9-day rally, that might be a way to participate. Like I'm not really like a huge believer in Bitcoin, but I think as a speculative vehicle, it definitely has a place. And I'm just looking at it right now. I'm like, that looks like it could go. I mean, the IGV and the Bitcoin have kind of traded together, so it's the same trade more or less. And either one of those they've both gotten absolutely destroyed since last October. And so if you were like, hey, I see this risk on environment, all of a sudden after an ugly month, then maybe that's where you go. I find it comical that the S&P is right back at the highs, but that is something that like kind of struck me a little bit today. I was like, oh, look at Bitcoin back at 75K. Get back on the horse, David.
Well, there is an old saying, that you buy the bullets, right? When a war starts and it's out there, that's when you should buy, because I just worry that it turns into something that we haven't seen yet. The reason that the phrase "buy the bullets" is it's the idea that okay, everything that's known is already known, and it's not going to get worse from there, or not materially worse. The market has priced it in already. But I think we've talked about on other shows that you don't know if we've really priced in. We don't know what this looks like. If it's what it's been, then that's fine. But if we sent all those troops for a reason there, then maybe it looks different. And how long can we?
Historically, buying the invasion was like a good trade. I feel like you get like, I don't have the graphic in front of me, but I think it's like you get the initial sell off, and then the invasion, and then you kind of buy the invasion, and like that's been a decent strategy over time. Like Iraq war was like early 03, and then the market went on a ripper after that. They have something with that for 1990 with
Kuwait.
Iraq 1. I don't know. I mean, not that it's always applicable to, each situation is different. I'm just saying that I think over time, buying the invasion has been okay strategy, to be honest.
Yeah, I can post it to the group chat or to the subscriber chat afterwards, because it's something that I did a couple weeks ago, and 100% right that The only time that it didn't work is when there was an extended period of much higher oil and gas prices. And so that's why I bought more of the S&P 500. I think I had mentioned it a few weeks ago. And I did end up selling my XLV to do that. I kept the XBI. I still think the XLV will do fine in a downward market and be a very good ballast, but I did all right. It started to underperform the last few weeks, the market overall. Kevin, I don't know if you have a view on what it looks like chart wise, but it's hard because it's such a short period of time, and the market's been up a lot. So I'm sure it's going to look somewhat favorable, but relative, I was less impressed.
Yeah, how big is UNH in this? United Health.
Let's see.
J&J is probably number one.
J&J had a good quarter today. United Health is about 5%, so it's sizable. Hi, I'm David Maris. If you like what you just heard, we've tracked every single pick we make on the show, every ticker, every thesis, every entry price, over 1,100 picks and counting. We put it together in a free report with our top 10 performers, the reasoning behind each one, and a preview of our full dashboard. If you want access, the link is in the description.